the 25th of June 2025. So what's in store for us? Today, I'll talk about the ceasefire being announced, Trump's pullback from the brink, oil slumps as Straits of Hormuz stays open. Now, in a dramatic televised address late on June 23rd, 2025, President Donald Trump announced a tentative ceasefire between Israel and Iran, confirming that both sides had agreed to hold active hostilities, following a weekend of unprecedented airstrikes and retaliatory threats. Now, the announcement triggered an immediate sigh of relief in global markets, with oil prices tumbling and risk assets surging amidst fading fears of a prolonged Gulf conflict. Now, this ceasefire, while fragile, signals a possible end to a tense escalation that had raised the specter of a regional war and, crucially, the potential closure of the Straits of Hormuz. Now, the scenario that could have sent energy prices spiraling and triggered a global economic shock as oil prices retreat and investors reassess the risk landscape. Attention turns to the enduring strategic importance of Hormuz, why key players like the US and China work hard to prevent a shutdown, and why Iran ultimately step back. Now, the Straits of Hormuz here is known as the world's energy lifeline. Now, the Straits of Hormuz remains the most strategically vital oil checkpoint on Earth, connecting the Persian Gulf with the Gulf of Oman and the Arabian Sea. It handles roughly 20% of global oil and one-third of all seaborne crude shipments, which is nearly 21 million barrels per day as of 2025. Historically, tensions around this narrow 21-mile wide corridor have triggered major oil shocks. In 1979, the Iranian Revolution cut Iranian output by 5 million barrels per day, causing oil prices to more than double within a year. Now, from 1980 to 1988, the Iran-Iraq war included tanker wars in the Gulf, leading to shipping disruptions and insurance spikes. Now, in 2012, Iran threatened to close the straits in response to nuclear-related sanctions, prompting US warnings of military retaliation. In 2019, tanker attacks near Hormuz pushed Brent crude up by over 3% in a single day. Now, these episodes show that even the threat of a closure can move markets. A full shutdown would choke off oil exports from Saudi Arabia, Iran, Iraq, Kuwait, UAE, and Qatar. Now, these countries is responsible for over 30% of global oil production. Now, while some bypass pipelines exist, right? Example, Saudi Arabia's East-West pipeline and UAE's Fujairah route, they are limited in capacity and vulnerable to sabotage. Now, why the US and China cannot afford a closed straits? While their strategic rivalry, both Washington and Beijing share a mutual interest. The uninterrupted flow of energy through the Straits of Hormuz. The United States, though not a net exporter of energy, still imports about 18% of its oil from Gulf countries. But more broadly, its entire economic architecture depends on a stable global oil price. A prolonged spike would elevate inflation, erode real incomes, and increase pressure on the Fed at a time when recession risks are already present. Now, for China, the stakes are even higher. As the world's largest crude oil importer, China sources over 50% of its oil from the Middle East, much of it from Iran, Saudi Arabia, and Iraq, which nearly all passes through Hormuz. Disruption to this corridor would send freight, fuel, and factory costs soaring, potentially derailing China's fragile post-pandemic recovery. Moreover, both countries are keen to avoid a broader commodity crisis that could trigger a stagflationary spiral, wrecking their income and political agendas. Now, analysts note that the shared economic interests, not ideological alignment, are what drove quite diplomatic back channels like via Oman, Qatar, and possibly Russia to push for de-escalation. So why did Iran back down? Now, Iran's decision to hold hostilities likely stemmed from a mix of strategic restraint, survival calculus, and military pragmatism. Now, the US strikes were calibrated, not total war. Satellite imagery and defense intelligence suggested the US deliberately avoided targeting Iran's operational nuclear reactors, example at Isfahan, despite hitting uranium enrichment facilities and missile sites. The strikes were powerful but surgical, signaling intent to disable nuclear weapons capability and not provoke regime collapse. Now, this nuance may have signaled to Iran's leadership that Washington sought containment, not regime change. That in turn gave Tehran room to de-escalate without losing face. All right. So number two is the fear of full-scale war with the US. While Iran has engaged in proxy conflicts and asymmetric warfare, it has long avoided direct military confrontation with US forces. Following the strikes, US carrier groups were repositioned and regional bases put on alert. Iran's likely judged that further escalation would lead to devastating retaliation, potentially toppling the regime or sparking internal unrest. And you also have the domestic and geopolitical constraints as well. Now, Iran's economy remains hobbled by sanctions. Its allies like Syria's Assad, Hezbollah in Lebanon, and the Houthis in Yemen have been weakened over the past year. Facing internal discontent and limited regional support, Tehran may have calculated that continuing the conflict risks far more than its promise. And lastly, is a strategic messaging achieved. Why do you say that? By launching a symbolic missile barrage, Iran could claim that it has responded to Israel's aggression, and Trump strike with satisfying internal hardliners without triggering wider war. Okay? So now I think the crucial area is what the market reactions. Oil falls, equity rallies, gold and dollar weaken. Now, the ceasefire catalyzed a sharp breeze on sentiments in global markets. Number one is oil. WTI crude futures fell over 7% on June 23rd and extended losses the next day. WTI dropped to a low of 62.71 per barrel, erasing gains from the initial conflict. With Hormuz safe for now and OPEC Plus having already raised output for 3 straight months, supply fears evaporated and speculative longs exited. Now, this confirms the conflict was about deterrence, not disruption. Absence direct threats to Hormuz, the geopolitical premium in oil prices have been erased, and that's why you saw oil coming down. So later when it comes to the charts, we'll discuss more on how to deal with that. As for the S&P 500, US equities rose modestly with S&P 500 futures gaining 0.5%, driven by relief over oil and a decline in perceived inflation risk. Tech and transport stock led gains, reversing earlier losses. Markets were bracing for oil at $100 per barrel, now with 66 per barrel oil. And easing worries, this could be an equity tailwind, which means we'll probably see S&P 500 rising as long as the current scenario remains. As for the US dollar, the dollar weakened against major currencies. The dollar index dropped 0.6%, with dollar yen falling to 145.4 from near 148. Investors unwound safe haven trades as the conflicts dissipated. Now that the straits are secure, there's less demand for US dollars as a hedge. Okay. For Bitcoin, Bitcoin surged 8% to 106,000, riding a wave of broader risk on appetite and speculative rotation. The move also coincided with lower US Treasury yields, bolstering crypto's narrative as an alternative asset. Now for gold dropped 1.77% to 3333 per ounce as haven demand waned. Investors rotated into equities and riskier assets while interest in inflation hedges like gold diminished as oil price fell. Okay, so as a conclusion, the crisis is averted for now. The tentative ceasefire between Israel and Iran may have diffused the most immediate global risk of 2025. The Straits of Hormuz remains open, oil is flowing, and markets have pivoted from panic to cautious optimism. But the underlying tension remains unresolved. Iran's nuclear program is not eliminated, only degraded. Israel's deterrence has been restored, but possibly only temporary. And while Hormuz remain unconstrained today, the narrow channel's vulnerability remains a persistent source of systematic risk for the global economy. For now, the world exhales, but as past decades have shown, in the Gulf, calm is often just a pause between storms. Okay? But hopefully, this calm lasts much longer. With that, that's the report for today.